speaking. Listen, listen, listen. He's speaking. Listen, listen, listen. He's working. Listen, listen, listen. He's moving. Listen, listen, listen. He's speaking. Listen, listen, listen. He's moving. Listen, listen, listen. We would only just listen, listen. Ooh, listen. He's still speaking. Listen, listen, listen. Was born I see. You deliver me. Hallelujah. Hallelujah. I was born I see. Thank God you delivered me. Hallelujah. Hallelujah. Thank you, Jesus. I was born I see. You delivered me. Hallelujah. Hallelujah. I was born I see. Hallelujah. I was born I see. Listen for the free man saying he delivered me. Look out for the woman shouting his garment they make me. Listen up, the season's changing, he's rebuilding everything. Listen for the people shouting, this is jubilee.
Good day, everyone. A lot of people in the industry, so really that wants to join the live stream. Okay, you can't do that on here, so just check in the main channel and so join that and click on the banner. Okay, so to a lot of people in the industry, I think most of what happens is that a lot of people don't believe that they can make it in this industry. So we have quite a number of people that they love the trio to want to trade. Okay, they want to be a part of traders that are making money. Okay, they love the trio with what trading gives. Okay, but it is not something that they it's not something that it's not something that they are really prepared for. So we have quite a number of people that wants to be a trader, they want to make a lot of money, because but it's not something that they are prepared for. And so we have a lot of people with self-sabotaging beliefs, and it really goes a long way. It goes a long way in helping you becoming a successful trader. Yeah, it goes a long way in helping you becoming a successful trader. You can pick this up, and within 3 years Yeah, 1 2 3, within 3 years you are already making a lot of money with the right mindset. But it won't come easy like that. It's something that you have to take your time, carefully learn, focus on the essentials, do a lot of back testing. I'll show you an example of crude oil. I back tested crude oil. There was a time when crude oil went below zero, such that a sachet of water, a bottled water, was more expensive than a barrel of crude oil. I'm sure you all can remember that time. It's really that is disturbing everyone, the peace of everyone. Crude oil, a barrel of oil back then, a bottled water was more expensive than a barrel of oil. And I did a back testing. Co-op, just have him join the channel, join the live stream. You see now. Sure, maybe I'm just being patient, and that's why I've not exited him out of the channel. He wants to be a part, so someone should help him. All right, so I will show you an example of how to backtest. Backtesting really just means that you're penning down everything you notice, how price moved from A to B, okay, from C to D, how it came back into B, and how it expanded into E, and how it came back into D, and how it expanded to F, and how we retraced all the way back to A, and all and on and on like that. So there's a couple of things to put together on this journey, but I'm begging you, I'm sure when this is released, when you watch it, it will be more clear than, I don't know, I believe it's very clear, but I'm using the OBS. The recording yesterday was about 7 gigabyte. Obviously it will be compressed, just compressed to about 600 megabyte, right? Before it will be uploaded on YouTube. So so I'm begging you that the basics, honestly, because when you go to ICT Twitter, I presume that a lot of you that are watching this now, you're on Twitter, and you're being mesmerized, you're being harassed, you're being harassed by a lot of people on Twitter. And so it's a lot of fine art. It's a bunch of fine art, and we have a lot of people now. Quite a good number of people give good information there. Hope you know when I say this, I'm not discrediting anybody. Do you understand now? I'm just telling you that you will achieve learning faster by focusing on the essentials. Yeah. You will achieve learning faster by focusing on the basics. Yeah. And you see, I posted something just before the live stream. I said you never will outgrow the basics. So fundamental and just about everything. Just like in basic math, addition, subtraction, multiplication, and division will always serve as a reference point to all mathematical calculations. The market will always book on liquidity, internal liquidity, external liquidity, fair gaps, volume imbalances, old highs, old lows. They couple these with your narrative, the order flow from your eye time frame, quarterly, monthly, weekly, and daily. The basics. Keep it simple. Many times when people try to complicate something, it's because they're trying to sell you on the mentorship, and so you hear what's like, these them trying to tell you it has not been had anywhere before. I've just cracked the market. Do you know human nature is naturally greedy? You think anyone will crack the market and want to show you for free? I mean, will even want to dare show you? You think so? Nah. If anyone really has cracked the market, whereby they will keep having consistent wins, they won't show you anything. They'll make a lot of money. And they'll keep it to themselves. And that's really just about it. When if you've gotten a master's in English language, for instance, the alphabet wouldn't change from, I think, the 26. It don't change from 26 to 30. Okay, it don't change. You see now, it don't change from 26 to 40. Even if you've gotten a master's in English language, it will remain the same. Alright, so I got someone sent something in now and said, well, Michael was selling mentorship. Okay. Yeah, he has the right to do that because, I mean, he revealed, well, you can say I have a bias for Michael. Yeah, maybe I have a bias for him, but he revealed how to trade rightly. Yeah. And before he actually started the mentorship, he was teaching quite a number of time on the there's this free baby pips, yeah, before he eventually now did it in a mentorship format. And you could give it to Michael. It was very detailed. How do you do a mentorship? And yeah, so that's one thing I love about him. He promised how that you are going to go through this through discipline, diligence, yeah, okay, and you know, and it really helped a lot of people. And that's something I'll be proud to pay for. And so for everything that Michael has done, there is no reinventing anymore, right? Actually, there is none. So if you put Michael in the category, you're just being an interesting person, and Michael is light years ahead of you. Not even light years, a whole lot of years ahead of you. Okay, and yeah, I don't want to dwell on that. Well, you also said you're probably gonna charge mentorship as well. You know, I love the fact that we have. Let me see. Yeah, I love the fact that we have someone like that here in the chat room. So you said, well, you're gonna, and that's why I'm reading your comments out, so people who are watching this later will know someone was there. He said, well, you're probably going to charge mentorship as well. Definitely. I'm saying in my full chest, I'm going to charge mentorship. Yeah, so if you're mad about that, if you're mad about that, probably you should exit the stream. But definitely I won't remove you because I love to entertain people like you. You see now. So Michael basically gave us that knowledge. So when I stumbled on Michael's YouTube channel, that was the first thing, changed everything. So I saw someone was dishing out knowledge so much, and Michael's YouTube alone at the time, I didn't know about his private mentorship. I actually did join. Now at the time I didn't know about that, and so just on watching Forex Max, some of you that know Michael old videos, Forex Max, Sniper Course, Market Maker Model, the very first one he did. Okay, actually, if you watch the new one he did than the first one, I would prefer to take the first one as compared to the new one he did. Yeah, those basic courses, trading development course, forex mass, ICT sniper course, market maker series, okay, and all like that, precision something, I can't remember exactly. Okay, now that that's that's those videos really changed everything, and I watch a lot of the free YouTube videos he put out. Okay, and it really did help. It really did help my recognition. It changed everything. So I'd learned from a lot of people. uh, I won't want to mention their names so that it doesn't seem as though I'm discrediting them. Okay, all right. But they really helped me how to read price, you know, particularly when I switched from indicators to price action fully. Okay, and then gradually like that, all the mentors I would say contributed to my growth till I got to Michael. And that's why really a newbie starting out with Michael's concept and really doesn't know anything about trading in the first place will find it a difficult time, because Michael's understanding was more like an unconventional way of teaching. Yeah, so he's telling you exactly. Okay, I guess you guys shouldn't be distracted so that you listen to me. Okay, I learn. It's just some few hours I have left, so some 1 hour and some minutes I have left. So I think it's smart to just pay attention, because most of what I'm going to say here, most of it will be in the little things, the things that I say that are not exactly chart related. Those were the things that really changed me. Okay, those were the things that really changed me, and those were what I paid attention to. Michael will always emphasize diligence. He will always emphasize discipline. In fact, he said he deliberately taught in a way that if you're lazy, you wouldn't get anything. He would always emphasize journaling. All right. He would always emphasize backtesting. I'll show you an example of how to backtest. He would always emphasize these things. So I missed learning from Michael. So I took those other things he was saying, because a lot of people complain about Michael being boring. Yeah, a lot of people mentioned about how he's uninteresting. He says so much, he talks so much, and on like that. EDC, okay, and it keeps on going. It keeps on going. It keeps on going. It keeps on going, and stuffs like that. So, and I was able to put all those things together to make a sense of the market. Now, close to 5+ years now, having studied Michael's concepts, still going all over them again and again, I find beauty in the basics, because the basics never change. You will see Michael keeps talking about the liquidity. Where is the money at? You'll see Michael keep talking about the old highs, the old lows, the fair value gaps, the imbalances. Okay, you'll see Michael keep talking about the narrative. The narrative. Where is price coming from? Where is price going to? And so these were the basis for which every concept thrives. And so you now need to put all those things together and then go to your lower time frame. One of the things I will endeavor to do in this is to do a top-down analysis on EURUSD. I bet you, because this is going to be a long video, when I put this out on YouTube, very few people will watch it till the end. And that's the issue, actually. So a lot of people want to be successful at trading, but a lot of people, they think that they are actually putting in the work. There was a time I was backtesting and my back was literally paining me, and it took really about 6 hours. Now I had to stop because I was already getting weary in my body. Yeah, and 6 hours of study, when I studied about the contraction, expansion candles and how they work, particularly on your weekly time frame and daily time frame. And I shared it with my community members. They loved it. Wow, this is beautiful. Now, you don't even the fact that I shared it with them doesn't mean that they will be convinced about it when they see it happen or form in the chart. Okay, unless they dig into it, unless they study. And that's why you see all that Michael put out. His free YouTube videos, he's putting out his mentorship out. A lot of people will still struggle till they die, and that's just the reality of trading. Because someone said something on my Twitter yesterday, I think Settle Black. He said something. He said that you can never cheat experience. That even these basics, it takes time. So you see Michael keep mentioning about liquidity. Yeah, he'll keep mentioning about how the market books old highs, old lows, on and on. You see Michael keep talking about the narrative. Where's price coming from? Where's price going to? Okay, and these things were on repeat. And so once you put all these things together, it changes how you see the market. Then when you go into the market, preferably from your Friday till Sunday, and you do a lot of backtesting. Number two, you stay with a pair or two pairs maximum. All right, and you keep doing this thing week in, week out, backtesting. And for some of you, I will say this: for some of you, you need to stay off social media. Okay, you're everywhere. You're commenting everywhere. You're retweeting everything. You're just everywhere. They see you everywhere. You can't get any better. You can't get any better at all. You can't. You can't get any better because you don't have a concentrated focus towards learning, and so it affects everything. You see now. This 2-day session we are having is such that the many things I say in this it could be very life changing for you and could change how you see the market altogether. Could be very life changing for you and changes how you see the market altogether. But it starts from, do you really want it? Now, when I say do you really want it, the answer is not in you saying yes, I really do want it. It is seen in the actions you're taking. Then you come tell me and say, well, this is not what we want to hear. We just want to hear you talk about the chart and how you break down the chart. The basics. The basics. The basics. The basics. Borderline. Discipline. Diligence. Journaling. Backtesting. Yeah. Week in, week out. You're staying with very few pairs, maximum of 2 or 3. Okay, and you keep doing this week in, week out for the next 12 to 18 months. Tell me at the end of 18 months that you are not good at this, and I will tell you that you didn't do it the way you ought to. Okay, because another side to this is a lot of people, they want to be good at trading, but they are also impatient. For people that are in my community, there are some weeks that I don't place a single trade. If I'm not clear on something, I'm not clear. Gone are the days where I'm itching to chase price just about anywhere price is going to. And because I know price is going to heaven too, doesn't mean I wouldn't pay myself. You can see this, that like you can see my screen now. See what I posted here. Okay, put here rather, when you fail paid trader, this is what you get. Pain. So at the borderline of all of this is recognizing that how you get good at this, is by tasking yourself. Okay, and tasking yourself is really by putting in the work. I'll show you an example of how to backtest. If you followed my weekend learning on Twitter last week, you see I posted over 50 flashcards. I have a journal, a server, a journal. You can see it here. Right, my journal. I wouldn't say, well, I have a Discord community. There's no point having a journal. No, I do have a journal. And everything I shared here, I called it Decent PA Studies. Everything was from my journal. Okay. And this really changed me. I'm telling you things that really helped me. Because when you're listening to people that inspire you, people that you aspire, that yes, I think I love what this guy is doing, I think I want to. You don't focus on their successes. No, you don't do that. Being smart is just being smart. Being smart is that you're paying attention to the many things they say in a subtle manner, indirectly, that change them. And for many, you would see how, they will say, oh, I remember when I used to do this and do this in the night. I remember when I used to do this and do this. I remember how I used to take note to do this and do that. Those are the things you pay attention to. It's just being smart. Right? Because we're in a day and age, social media, a lot of people are living a fake life out there. So I could as well package, okay, and give you something that is not real. If you're not understanding me, if you're not getting anything worthy of value that you can replicate the same things, then there's no point to listen to me. There's someone posted on Twitter yesterday. I was following him before I had to unfollow him. I said, what's the meaning of this? Why talk to someone like that? Now, he posted something and he was trolling another person how that he traded the opposite of his trades, and yeah, and how that is the better trader, blah blah blah. And so someone asked him, oh, where's your stop loss? I can't see your stop loss. And then he said, are you dumb? Why can't you see that the stop loss is way below? And I just had to, out of necessity, message him that, what's your purpose exactly? Is it really education or what? Why reply to someone like that? I told him, you're only privileged to be in this position. I told him, you're going to die someday. And now it's not a cost, it's inevitable. You're going to die someday and your money will be worthless. Okay, it will mean nothing at the end of the day. Because there is disposition to, it's the social media day and age now, that so a lot of people are carried away by, oh damn, that is a lot of money, but they are not seeing the other end of diligence, of discipline, okay, of focus, okay, of consistency, okay, of daily showing up. Do you see now? Okay, and they are so focused. A lot of people distracted on Twitter, on Instagram, and that's why people will keep getting scammed. Okay, so these are the little things. It's the little things that matter. And so when you're thinking from that point of view that I really want to be better in my trading game. But if I want to be better in my trading game, I need to focus on the essentials. I need to focus on the basics. I need to focus on the raw materials that mold me. Okay? I need to focus on a whole lot of things. Now, if you see something here, the pinned message, we have a lot of price action studies, obviously collated by me. I pinned it in a way that everyone could have access to it. But click on this, okay? You see down till 59. These are different price action studies of how price moved from point A to point B and went back to point C and went to point D and go back to point E and on and on and on like that. So this is one we're checking. S&P Crude. So we'll start off with this, how to backtest. I see some of you already doing well in how you backtest. Some of you that are students of mine, okay, I tell you do this, and you learn from it and how to backtest, because this is really what you need, rather than up from one system to another system. Okay, you stay with the basics. Internal liquidity to external liquidity. It will take you obviously some months to years, depending on how fast you're able to grasp it, to grow in conviction of the same. Besides, let me also add, there's no methodology that doesn't have losing days, because if you're trying to learn this to avoid losses, and that's another error that a lot of people make. Another error a lot of people make, and you're trying to avoid losses. You're trying to not take losses, and it only happen that way. There's no methodology that would not have losing days. It's not because of the methodology, it's just because you are the varying factor. You are the one that has emotions. You are the one that may have a wrong sense of judgment in how you see things. The market has no care about who you are, where you are from. The market is the market. The market does what it wants to do when it wants to do it. You are the one trying to place a gamble on the market with what you call your edge. And that's really what it is. Okay, and so when you recognize that there will not be a fear, and when you see that you're fearful and stuff, you reduce your risk. After you've learned the methodology, you reduce your risk 0.5% maximum per trade. If you check my channel, okay, I think I unpinned it. I'll pin it back again. There is a place where I have my rules. I carefully drafted it out. Max loss in a day, max loss in a week, max loss in a month. I mean, these are basic things. Look at how I'm saying it. Now, a lot of you don't even have these rules that helps you. You don't have such discipline. You don't have such disposition to trade in. Now, tell me how you want to be successful without these basics. I'm telling you, because this is how you see patterns form all over again. Imagine me having a series of flashcards in here. I have series of flashcards in here. Series of flashcards that I go back to. I check. Series of flashcards. You see now. Series of flashcards. Now I see the patterns form again and again. It dawns on me that this is how the market books. Whilst I was teaching yesterday, a friend of mine, he also joined the live. He had to message me yesterday. Whilst I was teaching, he said, damn, this thing works on and on again. I mean, this is someone that, I mean, we talk about trading here, and so I was surprised that he gave such exclamation. Obviously, yes, it does work. Because sometimes, even as I teach, I see again that I just really myself need to keep focusing on the basics. It's just really about the same things. This is really about the same things. Yeah, it's just really about the same things. Now, tell me if I see something like this form any time again, that I wouldn't take this kind of trade in line with the IUF, obviously. Accumulation, retracement back into New York, fill the fair value, and rally back up. Typical kind of trade. And look at very nice. We'll go take previous daily's high, right? And so the more you have instances like this, it helps you in how you see things, right? This is another one. Okay, took the previous day's low, BMS, came back to fill the fair value gap the very next day, IFED, and rallied up. You see something like that. Now, the more you have these things and you keep seeing these things, or you keep seeing these things, it changes everything. This is another one. Inside the daily fair value gap, came to take this this trend line phantom, bought into the daily fair value gap, bought up. You see now, all right, and that's really what we had. Okay, and you can see I was one who actually did this finance. Okay, and so whilst doing all of that, went up, came back down, took this low, right, and continued higher. And you just see again, price would always seek for liquidity. Always. This is another example. Okay, you can see rally to the upside. Okay, IFED ended what, a daily reversal candle in line with the IUF, right, and consolidated for 3 days before an expansion. Now, a retail trader will see this bearish candle and feel, well, we're selling, of which price actually just feel this point, and this, if you see this candle, you don't know what to do, you wait till the next day, and after the next day, you know how to then place trades in the direction, right, of price. Now, how would you be able to spot these patterns, repeated patterns? I'm not saying pattern the way it is used in the retail world. You get what I'm saying? How would you be able to spot these repeated patterns if you don't backtest? How would you? Right? This is gold. I remember when this happened. Now, each time I check the flashcards again, I remember when it happened because I was the one who did it. Okay? I was the one who did it. Alright? You see, so price accumulated, manipulated to offset the lows, and so opened, you can see, manipulated lower and bottom, and that's, you see all of this, and so somewhere around this range you start looking for your trade. Okay, see, came back down, stops entry to the upside. So let's check the crude oil. Right, so it was a very exhaustive, and so when you want to back test, for instance, this is what it means to back test. Okay, this is what it means to back test. This is what it means to be an effective. You see, I wasn't using so many buzzwords. Definitely over time, over the years, how I annotate the charts became more cleaner. Okay, because every time I'm refining how I do my top down. There was a time, I think it was the time I did a top down on USDs, and it was really very, very clean, very clear. Okay, you can see now. Obviously, over the years, I got better in how I annotate. I really want everything to be very clean. Okay, very clean, very easy to read. You can see, contraction, expansion, objective still clear. Okay, and all of that. Okay, same things across board. You can see, look at this beautiful fine arts. You can say that, but still just about same things. USDs are monthly time frame. Price came to take the sell side liquidity beneath this point and then bought up above this monthly candle and on like that. We had price expanded into the CB and the clutter and obviously things like that. So so first you want to pay attention to the struggles of successful traders. Okay, and one of the things that will make you see these repeated patterns over and over again and help strengthen your conviction is backtesting, or we say journaling. So let's look at Crude. Okay, let's see how Crude fared. Someone says help me with the link. Someone should help put him through and how to be a part. Yeah, Miles, you could help me do that. Thank you. So I said the word stood in awe when this flash crash happened. We saw crude oil go down to less than zero, literally what a negative value. Quite clear, as you can see on the 3-month chart, that an equal low has been there for 13 years, between 1986 and 1999. Was also taken as price ran rather too quick to the downside to less than $0. The news cables, everyone around the world got talking, but we have seen crude oil rose to greater heights since then. It has since been buying for over 15 months. Now, 1 year and some 3 months since the incident. A bottled water became more expensive than a barrel of oil. What a time in history. And so this actually literally happened right before crude oil came on the scene in 1980 thereabouts. And so we had all of this. This was the huge flash crash. Okay, just a huge flash crash. Okay, and it closed that same month. It was actually in 2020. It closed that same month, I think February. Closed that same month, February or March now, I'm not sure, at $19.05. $19.05. And we kept buying up till then. Now you see carefully, I was annotating, I was giving expressions to, I was putting words to my annotations, and I was screen grabbing, okay, and posting it. Okay, so you can create a journal on Discord or on Telegram. Now I advise you do it on Discord because you can that way organize your trade, your chats, and it also gives you cleaner quality. If you post on Telegram reduces the quality except you post as a file. You see now, okay, but if you love it on Telegram, good, it's fine as well, because I was journaling on Telegram before I got to started using Discord, because I love the organization on Discord, how I can have a server and have several channels within a server and on like that. So you see, I posted this first, then I said May, June, July, August, so higher prices, okay, and on, and we actually ended let's say around 42.79 US dollars. Okay, don't forget, starting from less than $0, okay, and August ended at 42.79 per barrel. Okay, you would have expected a retracement. Look at this candle. Yeah, you can journal both with a normal note and with an online journal. Yes, Notion, Telegram, Discord. Yes, you can. Anyone that works for you. The idea is that you journal. That's the idea, right? But I will advise you keep it digital and also have a note. Both works, because I have some notebooks. I printed all of Michael's mentorship, month 1 to month 12. I printed every one of them. Okay, I have notebooks as well that hates my learning, as well as flashcards that I can see print. I have over 3,000 flashcards on my phone. I could just go there anytime. Let's say I'm on transit, okay, I could just go there to keep myself busy, just to see how things play out all over again, to remind myself. Because one of the things that will help you in trading is a conviction of what you know, and it will be tested live when you're trading. So if you're not convinced of what you know, it'll be tested. The market will reveal to you that you are not convinced of what you know yet. Yeah, sure, the market will reveal that to you, that you are not convinced of it yet. And so you don't want to be that kind of trader. You want to be a trader that has back tested so well that you are convinced of what the market does. I mean, when I mean convinced, you're convinced of your moves in the market. Oh, I intend to buy here, I intend to take my profits there, I intend to pull my stops here. Okay, so if the market takes these stops, then I'm out. I'll reevaluate later. Not trying to, well, maybe market wants to go a little bit lower, then I'll shift my stops again a little bit lower, then till you burn your account. You see now. So I kept on adding more, okay, annotations to my chart. I said this was an obvious buy sell liquidity with stops resting above the eyes. Okay, it is price took this high, buy sell liquidity 1 week. You can see an obvious liquidity. All right. Came, having purged this high, retraced and continued higher. Okay, so it just retraced a little bit, which showed that price was really reaching out for higher prices. I'm going to answer that question. Just let me continue this. Okay, so, and I checked the COT, just things I look at. All right, check the COT, what was happening at the time. Commercials were heavily net short, and which means that, you know, higher prices. Obviously, I don't read it the way Michael reads it on, and this is one of the places where I differ. Okay, I mean, it's not so much difference, but just in the way Michael teaches it and in the way I've seen it consistently play out, I rather stay with how I read it. But that's not the goal of this session. So I'm just showing you how I journal, and then I also check the seasonal tendency. I said, well, the month of June into July and beyond, we'll keep seeing higher prices. I said we have our boxes checked. Mind you, I was journaling every single thing. What you could see here is that I was being detailed. So you can't say you're journaling and you just put everything on the chart and just 2 pictures, 2 flashcards, and that's all. No, you can't. Then that's not smart. That's not smart. I'm telling you, that's not smart. That's not smart. Okay, you want to rather, okay, be as detailed. You see, I was carefully bringing this thing step by step, step by step, step by step. Now this is a 3-month time frame. What is this candle here? What can you see? We've called it what? When price take the previous day, the previous candle's low and high, signifies what? A reversal. This is something you should go and back test on. Go and unfold your chart. Daily, weekly, monthly, quarterly time frame. Anytime you see something like this play out, obviously in line with your IOF, you will know most times if it's in line with your IOF, the higher the time frame, it signifies the retracement or reversal that happens. Okay, and immediately this candle formed, took the previous quarterly candles low and high. You see, it kept on buying. It kept on buying, and we kept seeing higher prices till it took this point, equal highs, and till it took this point. There was a CB within this point. Now I was carefully paying attention to everything, and I was writing out everything. Price quite clear on the 3-month chart. The CB obvious with scared money there, that will definitely be poked. Crude 1 month, okay, same things. And so there was a fair value gap, okay, sell side imbalance, bias and inefficiency on the 3 months. Okay, carefully you can see how I was carefully penning everything out. Now, because I was expecting price to come higher, I still noted that there was an obvious order block price could want to give a retracement at this point. But when your higher time frame, now monthly time frame, this is a monthly time frame, but when you have your quarterly time frame showing you that price is likely to buy up into a fair value gap, and because price has taken a hold of liquidity, so it is coming with that array of liquidity taken to reach for another internal liquidity, okay, which will be an old high with an old low that creates a fair value depending regardless of the time frame. And that's really what happened. Okay, now you will see on the daily time frame, zooming in closer, what played out there when price, having punched the weekly to the left side, the buy side liquidity came back down, went up. This is a daily time frame, came back into this fair value. Look at this is an example of how to back test. You see, I've been on this now, so many flashcards, and we have not even gotten to the end of this because this is exactly what it means to back test. You can see the same things played out here. Gave an expansion into this fair value gap, sold back into it, daily candles. Okay, now one of the mistakes people make is that they lose sight of their higher time frame, and they are captured in the ups and downs that the lower time frame gives. Look at this day, the spin bar. We had 2 up days before the spin bar, but this spin bar sold, almost taking this daily's low before ending this way. And so someone just focusing on the lower time frame will think that that is all there is, that his price is most likely selling. But when you zoom out, you always will see what the high time frame is. It's interesting that price could come take this low and still is buying, but that's the issue, and that's why you can't really say when you will have losses in the market, but you can predict when you're in a high probability environment, and you can trade accordingly. You can trade accordingly in that manner. Okay, and that's really something again that no one will teach you if you don't backtest. There's no way you would know. There's no way you'll be able to see these things. So when you backtest, you objectively, and when I backtest, I'm very objective in my backtesting. I'm checking. So what would I honestly would have done here? Most likely I would have taken a loss. So I reinforce to my mind that so there should never be a time I'm over leveraging in this market. Nothing is certain. I have an edge that could see price, but I will still ensure I keep my head in check. And that's why when I get in on multiple entries, if I'm pyramiding, if I got in on, let's say, 50 lots at the starting point, and I see that price has expanded so much in my direction, and I want to add more entry, I'm not going in with 100 lots. I'm going in with divided by 3 of that. Okay, so I'm going in with at least at most 12 lots. 12 lots, all right. Okay, or 15 lot max. Okay, because what if price tanks on me and even comes back to my entry? What if? So when I add more entries, I ensure that my risk is still maintained. Now these are things that there are a lot of things you will discover about yourself, about the market, and about yourself as you backtest. We've just gone through how many flashcards? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And look at where we are. You will see even in this backtesting, or this journaling you might call it, I gave room for where I would have entered the trade and I would have also taken the loss. You would see it shortly, because it really helps. it changes everything. When you backtest, you're able to see how price books, how price works. Okay, it changes everything. All right, it changes everything. So within this same order flow, you can see that price still almost took this previous low, but it was still bullish. And after this pin bar, the contraction expansion that Michael shared, I expanded it to my folks. You can see it here, contraction, and the very next days 1 2 3 went to take this high. That was a trade to make a lot of money on. Okay, right, 1 2 3 buy days, 1 sell day, 2 more buy days, consolidated back, okay, and continued higher. Let's continue. In 4, it said price delivered price nicely. I used this place as the stops, a 4 time 4 of the block, okay, a fair value gap. I was expecting an expansion, okay, and this was it. You can see still within the 4 hour. I tapped it once here, okay, came a little bit to tap it and then expanded. Pay attention. Said, you see now, expanded like we discussed. Don't forget, whilst price was expanding on the 4 time frame, I hope you're with me, everyone. You can see how I'm carefully taking you through. Whilst we were expanding on the 4 time frame, everything was based off the higher time frame, and you could see I still had my higher time frame monthly bearish order block in view. That is, I was going to take profit here and not just allow price dunk on me, because what if price was about to dunk on me, okay, and I'm trading the hourly time frame, and so the higher time frame is telling me, well, it's time to please give some retracement. It's been buying. What if? So whilst I'm trading on the lower time frame, I'm paying attention to what's happening on the higher time frame, so I'm not losing sight. I'm not losing sight. Okay, you can see on the 1 hour that was what happened. Now, did price hit this bearish monthly order block? Yes, price did hit it. Can you see now? Price did what? Hit it. Can you see? So will this have been paid trader? Will this have been paid trader? Taking the entry from here and this point as it stops? Obviously, everything I'm showing you here, everything works on any chart that has candlesticks. You're trading volatility indices, you're trading VIX, VIX 75, VIX 25, VIX 100, crash and boom step, whatever you want to trade in that field. You're trading EURUSD, S&P, Nasdaq. You're trading just about any market. You're trading cocoa, you're trading sugar, you're trading corn, coffee, anyone. When I did a video on seasonal tendency, for 30-day mentorship, one of the things I used was, I think, coffee, and it delivered good. The beauty of understanding Michael, you wouldn't see it until you start backtesting and you start trading the ICT methodology way. You start seeing the beauty of price, how that from your high time frame you can see where price is going from a long distance, and you are able to position yourself way before price, way before it happens. And that's the beauty. That's the beauty. If you don't backtest, because in your backtesting you're really looking for the basics. Okay, you're really looking for the basics in your backtesting. All right, old highs, old lows, fair value gaps, imbalances, the narrative, those three: old highs, old lows, external liquidity, fair value gaps, imbalances, internal liquidity, the narrative. Okay, so you're really looking for the basics. So the basics all over again, you run it over, the basics all over again, you run it over, and on, and that's just how you're going about. That's how you're going about this. And so this is really what changes everything. Changes everything. So did we eventually get to the monthly or the block, bearish of the block? All right. Yeah. All right. Eventually did get there. Yeah, this is it. So look at how I was journaling my thoughts all the way down. This is how to journal. If you've journaled before, for some people that are told to do that and they go back to me, they will tell you it's not easy. If you really want to be detailed, one of the things that I know people love about, in the early days when it was still ICT flashcards, was how detailed I was with journaling, how detailed I was with putting out the flashcards, and so people stayed glued. Okay, so when we got to the monthly or the bearish of the block, I was expecting price to retrace at least before a continuation. Okay, because you see on the weekly time frame, we had series of closed daily candles and they gave a bunch of trend line phantom. All right, so I was expecting price to at least give that sell and continue. Now I can't remember what happened, but because I have it on paper, I have it digitalized, I have it on digital print, so I can always go back to see what happened, to understand the behavior of the market. Okay, and that's really what it is. That's the beauty of journaling. Okay, so this was the 3-month fair value gap. It was still way above. The price eventually did get there. Obviously it did, but how did it get there? That's what we're looking at. Okay, carefully journaling. So now all these put together here, they were done different times. I was trailing price. Okay, I just put them together right in here. I was trailing price. Okay, so you can see again exactly what I said. Haven't hit this bearish monthly or the block. You can see how price sold back. Is this making sense? Now, is this making sense to you? Can you already see how we are moving from the higher time frame to the lower time frame? Okay, and moving from the lower time frame to the higher time frame. Okay, and putting things together, seeing how, or let me say, from the higher time frame to the lower time frame, and seeing how everything is working together in synergy, because this is where it all matters. Okay, let's keep going. Okay, so price sold. Okay, price come in just a minute. Okay, so price sold quite some. Okay, and sold even to the daily or the block, I suppose, this candle right here. Okay, and when he did all of that, created a buy sell liquidity. Okay, and bought up. Now when he bought up to this point, took this high where he started the sell from, I was expecting price to at least come down so that I could get an entry for a buy. You see now, so this arrow and this X means that price didn't actually come down. So there are times that the market won't deliver to you based on what you expect. Okay, so you have to come to terms with that. You have to come to terms with that. Okay, and so when all of this happened, you can see continued higher. Okay, and on the 5-minute time frame, London 1-2 in between, rally, pay the trader, accumulation, and all of this took this low, bought back up, took this high, retraced back, 5-minute time frame, your easy peasy bread and butter setup. Above this high, first take profit, then this high, previous day's high, I suppose, second take profit, and price continued that way. 4.5 hour was delivered in that sense. So when we hit the hobby on the monthly at first year, we came all the way back down. Now this is a 5-minute time frame. Where is it? Yes, we came all the way back down and we continued higher. Okay, so BSL purged. You can see how I was documenting everything that panned out. Okay, so I said we've seen nothing but higher prices in crude oil as discussed since its inception. Price has been rallying more so to the upside with opportunities made available at intervals to get in on longs. Now all you should be looking for right here as a smart trader is longs. So where you don't see an opportunity to trade long, you patiently wait till it gives you such bias. Now this was a 4-hour time frame. This was a 4-hour time frame, of which ideally, with this expansion, I expect that we shouldn't come to take this low. Yeah, we should expand higher. So my idea was that we should just a little bit retracement to this fair value, continued up, but this was the low of the range on the daily time frame, and this was the high of the range. But price came this low, just for a stop point, of which this low as well was a 618 Fibonacci retracement level, factoring this low and this high, and before it continued to rally to the upside. Again, no one is infallible. You could take losses on the market. Just ensure that when you're taking losses, you're not taking more than what you project to take. Okay, how would you recognize these things if you're not backtesting? Because when you're backtesting, you have to be sincere with yourself. Okay, if you're backtesting, you have to be sincere with yourself. All right, you have to be sincere with yourself if you're backtesting. Objectively backtest. Don't just backtest and say, well, I'm going to see it and I'm going to take it. No, be sincere with yourself. Would I have seen this? Would I have placed this trades? Would I have actively engaged this? And then you're training your eyesight to see it. Okay, so so you can see on 2-hour time frame, all of that. We had left the OB on the monthly, shows higher prices obviously, and we kept expanding. And it's the beauty of that is that I kept journaling everything. This was that huge recount, went up higher, came down, bought up higher, and kept journaling everything. Now see this as well. Price did a fake out only to come for discount prices, accumulated longs to the upside. This happens even on a high time frame. This pattern that it will fake out a lot of people and then retrace for a discount pricing to then buy back up. Okay, it said discount buy respecting low of the range. Price faked out a lot of people before going down for discount buy. This is where your patience is tested as a trader. Okay, and on like that. I kept on journaling. Kept on journaling. Next projected target. Okay, now I was expecting very good now, because you see in my journal I also was true to myself to show where I would have gotten it wrong. So you can see right here, I was expecting price to respect this fair value and buy up. Alright, but I missed out something. Okay, I said price indeed came to a point of entry and bought for 8 hours. 2 4 hours candle, 1 2. Before selling, price went to seek for internal liquidity. Now this would be an ideal buy setup, very ideal but yet probabilistic. And why you must never risk more than you should in the marketplace. This would have been a loss if engaged. IRF is still in check. We are still bullish. Now the mistake a lot of people will make is that, well, we are bearish now rather than bullish. It's still a bullish IRF. How do I know from a higher time frame? Okay, but engaging price on the lower time frame, you could have some in betweens here and there. So when you will determine if price has invalidated your setup is still from your higher time frame. So if you're checking your weekly order flow as bullish, and because your 4-hour 1-hour time frame is telling you something else, you then assume that you're bearish. No, that's wrong. You rather wait for your bullish your weekly time frame invalidates. You wait for that to invalidate before you come to your lower time frame to then start seeking for active sales. So this was bought for some 8 hours and sold. Let's see where it sold to. See now. So price sold back. Alright, sold back to this point. Okay. Tapped it. Alright. And that was really what happened. Haven't expanded so much. Okay. Look at it. I was putting in all my thoughts together as I was journaling. Okay. And this is really about, if you're not ready to do this kind of work, you are really not ready for trading. You can see it's as far back as 2021. You're not ready for trading, because this is where the work really is. And on and on and on. All right, there was still that. If you remember this, this point, okay. If you remember this point, someone says they can't hear me. Just 1 or 2 persons confirm you can hear me, so I'm sure that it's not from my end, it's from his end. If you remember this point, this was the quarterly fair value. Okay, so you can see the beauty. You can see the beauty. Price tapped this point, rallied back up, came back to this fair value, and continued higher. Okay, for those who can't hear me, ensure you fix your end. It's not on my end. So you can see, took this high, broke structure. That was the high where price sold back to this discount array, gave this point, but this was not where you were going to engage. Took this high, and then this is where you were going to engage, and then you can safely use this point as your stops. I've done back testing for even scalping, okay, using 5 minutes, 1 minute, and one of the things I got from it was there was a quick feedback loop. If price doesn't immediately respect the levels I'm looking at for price respect, then that's all. That's it. One of the things backtesting does for you is that it reinforces the same things all over again. The same things all over again. Okay, the same things all over again. Okay, so the basics still remains the same, and you can see I haven't done that. You say something, you'll be able to spot here this fair value, this low, and this high. Okay, and you can see both expanded. Now we've been paying attention to this point all the way, and eventually price did what? Got there, right? Exactly. Price did get there. Now I pointed your attention to this day, okay, and what happened exactly at this day and how you would have engaged for the expansion. Okay, so I asked the question, could you spot the OTE around this point? Could you spot the OTE? Where exactly was the OTE? Was it here? Was it here? Was it here? Was it here? Right? So having ended that day a contraction, we go into the next day looking for buys. Now this was the day ended a contraction to the upside, closed above the previous day. Okay, and so this was that contraction. So the OTE was actually at this point. let's look at it closely. Okay, did a BMS retraced down to 15-minute OB before running to the upside 7 to 10 hour contraction the previous day. There was nothing clear to trade off on. Then the very next day, OTE retracement, and on like that. Another entry into early New York and an expansion. That's really all we had. We expanded straight up, okay, and market delivered 12-hour and more. 3 to 5 hours is enough. You will not always have such kind of trades. So all together, we looked at price, how price moved from this point. From this point to this quarterly fair value. And that was how I back tested everything. You can see this. I was the one who did this. So, do you have an idea of how to back test now? Please reply, just to be sure you understood how we carefully looked at how price moved. Alright? Not a lot of them. I have a lot of them here. Just showing you how to back test. So do you have a fair idea? Okay. It says 1000%. I love the reply. So it shows that you're more than sure how to back test now. Yeah, so that's how to back test. So if you're not ready to trade in this manner, you're not ready at all for this game. You're not ready. Yeah, you're not ready. Right, so back to the chart. See that all my back testing, I wasn't using any software other than TradingView. Okay. Yes, it is show recorded. Yeah, sure. Yeah, you just have to be detailed about just about everything everything you see in the chart. So someone asks a question. It says, I'm confused about what to do whenever there's an FVG in DXY and EURUSD, but only EURUSD trade into the FVG offering a BMS and DXY FVG is yet to be tapped into. Do I wait until the FVG in DXY is also tapped before looking for any setup? How would you navigate yesterday's price action on EU? Okay. Yes, so journaling, yeah, it's more about journaling and annotating. Yes. All right. Yes. Someone is asking what is OTE. So it's just something that Michael famously coined. So let's assume that you have price move from this leg up, okay, and retraces back to this point and rally back. Okay, so this is what Michael calls OT. It's just a retracement level. So he always says to focus on 618 to 705, which he calls the sweet spot. Okay, so that's, so when you have price move and you're expecting a retracement, you're expecting a retracement at discount levels. Okay, so anything above, that's why you see anything things above 0.5, there's nothing there. I took it off, but below 0.5, yeah, I'm interested to start looking at, because those are discount levels. From 0.5, 0.5 or 50% is equilibrium. Okay, so below equilibrium, discount levels, if it's a bullish rally, discount levels. Okay, and look for, it's at those levels you look for buys to move to the upside. Okay, so let's just check Fiber yesterday. So he asked a question that what would have happened if you were expecting dollar to fill is fair value gap, and dollar didn't fill its fair value gap, and EURUSD in turn filled its fair value gap. How would you have approached yesterday? Now, for one, I didn't trade. I've not been trading because we are not in a right environment personally. Okay, and I'm not bullish or bearish fiber, but they're just saying things I want to see before I'm getting back in on engaging again. And what I want to see will start from my DXY. So the first thing is I didn't engage yesterday's price action. You wouldn't be proud to see such price action as this yesterday. Look at all of this. How do you call this? How do you explain trading this? Because when you want to trade the fiber, you pay attention to the dollar. Okay. Yeah, so this was yesterday's price action. Right? And so I'm still wondering how anyone would have traded this. So let's check fiber as well. Okay. This is yesterday's price action. All right. Or you can say, well. You can say, well. Price bought up and came back down. Okay, and then bought up and now came back down to offset everyone. So is this a price action you want to trade? Obviously no, right? Because there are things I look out for before engaging price, and that's why I'm sitting on my hands right now when it comes to dollar and fiber. Okay, so I'll show you. I still want to do a top down, but I'm glad I've been able to show you how to journal. Before now, ideally, I was expecting price to respect this low and give us a expansion and continue lower and move up with this accumulation. All right, so it didn't play out that way. I'm not the market. I'm to trade what the market does. Okay, and that's really all we had. A messy PA. So how do I decipher this? How do I put things in check? Where's price headed for? I don't have a clear read at the moment. It would be a lie to tell you that I have a clear read. But one of the things I can do is to go to my high time frame. Don't forget that we've been buying since where? We've been buying since this point. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 weeks of buying. Okay, 11 weeks of buying. Did we feel the monthly fair value? Yes, we did feel it. Could we start going down, selling to the downside from here? I mean, when I mean downside, I mean down. Like taking this low. Yes, we could. What are the vital things that will signal that? Am I already certain that that's going to happen? Obviously, no. What am I looking at? I'm looking at price coming to respect this point, the open of this candle and the open of this candle. Now, as price keeps selling to the downside, how price prints will be important. So now, what will be the vital points that I'll keep looking at now to signify an uptrend? This point. All right. Come in just a minute. All right. This point, why? Because that was where price started selling from. Now you see it, this point, but that's a long way, right? Good. Okay, so how do I approach this? We're already at a fair value gap at this point. Okay, we're already at a fair value gap. This is the fair value gap, right? And we filled it a little bit yesterday, bought up, we're about filling it. Price takes this low, another significant pointer, because this was another liquidity that was purged to the upside. Okay, if price comes take this low, then another pointer, then if price gives us something to work on, okay, and then sorry, that was not how I intended to draw that. Let me draw it again. Let me use this. So it gives us something to work on. The price gives us something like this, create a low, buy back a little bit, sell again, buy back to cover this fair value, sell again, and create this point. Now this will be my low risk sell, and then I can take it back down using this point as my invalidation. Okay, what I would not do is trying to catch a falling knife. Okay, now we're selling. I don't know exactly where we're selling to, and so that's what I would not do. Okay, that's what I would not do. So I'll keep watching what price does on this pair. Okay, because this is what I will then use to decipher how fiber then print. Because we check fiber, let's check fiber together. You can see fiber really buying up strong, purge liquidity right here. Okay, but there's a fair value gap here that fiber hasn't filled yet, so I'm curious, all right, to see that being filled, but I can't say exactly when that will be filled. So what do? I patiently wait. Okay, and if I don't like the way my charts are messy, so let me just go to another. Okay, yep, so I can use this as my range. Actually don't. I can use this as my range low, range high, okay, and range low. All right, so but dollar is already giving me an inclination. Oh, someone just said fiber field a fair value gap on futures. I'm playing the devil's advocate. Dollar already filled is monthly fair value, and so that's every reason for me to think that on both sides of the coin we may actually have started the downtrend, and we'll just keep waiting for all this to get filled till 2050. So we didn't break any structure to the upside, we only covered up this fair value. Okay, and we started selling. All right, and so that's really what we had. Okay, so till anyone start thinking about any uptrend, this high has to be right taken. So till there's anything about any uptrend, we keep trading this. Okay, we keep trading this. Now if really this fair value gap is going to hold, you want to see price trade so much down, okay, and trade back up. Do you see now? But just because we have filled this fair value, you can see we have filled this fair value, and we can actually literally start selling. But till we have price gives us more data, we'll stay within what we have. So I said I want to do a top down. We've spent a lot of time now. I want to do a top down analysis on price, just using this data, and let's say to this point, monthly, weekly, daily, and we just stay around that. This is 2 hours plus now. It's just primarily reinforcing to you how the basics are really what gets the job done. Okay, and once you check your boxes for the basics, all right, and then the other things are add-ons in how you pick your trades and how you go about your trades on lower time frame. Should we use JPY again? I posted this PA. Okay, let me look for something else. Alright, so I'll quickly go through this. The end of the year usually has a messy PA, no doubt. I'll really go through this one. It's quite a long one. Oh boy, it's quite a long one. Oh, it's quite a long one. Look at this, look at this, look at this, look at this, look at this. Look at this. This is lovely, man. Don't mind me. Look at what I said. SMT demons. So to Bodmas asking for SMT. See the beauty of SMT right here. Look at this. Look at this. It's quite a long one. I'm trying to look for the beginning. Now you can see how stressful journaling can be. I'm still scrolling. Oh, this is crazy. Yeah, this is how journaling can be. It is hard work. It is a lot of discipline, a lot of diligence. Okay, so what I'm going to do is that because I'm already tired, okay, and there's going to be a final session. So final session is going to be like next weekend. So you watch the 2 sessions, you digest. Yeah, sure, it's useful. SMT Divergence is useful. Come on, you watch the 2 sessions. It will be posted Monday or Tuesday max. Okay, no, yeah, she posted Monday. Yeah, so you watch it, okay, and then the last session I will do the top down for the first 1 hour. Then okay, then I take your questions. I think that's fine. Yes, the last session will be the question and answer. Yeah. Okay, so again, to bring this back to order, price does the same things across board, right? Price does the same thing across board. COT insight, you don't need it to be successful in trade. If you want to do that, you can dig up on that yourself. Yeah, I just told you. Out of curiosity, you can learn about it. Yeah, but you don't need it to take profitable trades. So again, you can see, what do you see? 3 months. We came to the fair value. I'm going to be quick about this one. And having gotten the fair value on the quarterly time frame, you can see our price 3 months got into the monthly fair value, which was also a large quarterly fair value. This low and this high rather, and this low. Again, we're paying attention to liquidity, grab, internal fair value, imbalances, external, old highs, old lows, and your narrative. Yeah, 3 things you're paying attention to that gets you to place your trades. Right now, let's carefully look at this. There's a lot of flashcards. Now, this is an example again of how to journal, how to backtest. Okay, how to journal, how to backtest. All right, this is an example. Okay, so said we have a large fair value in the monthly, but then price filled, price filled this fair value in the monthly, taking this side. We have someone that is very, very zealous about this class and is telling me to focus on the class rather than answer questions. Okay, so I'll focus on the class right now. Yes, focus, Joe, focus. So fill the fair value. Okay, took this old low, external liquidity, into this internal liquidity, the BC and the monthly. Okay, or you can call it the fair value gap, anyone that resonates with you. Okay, so we had all of that, and so we had this insight. Now we want to look at how price did its rally towards this point. Okay, price filled on the weekly. Sorry about that. Price filled the FVG on the weekly time frame and moved lower. Okay. Now this is exactly what I was referring to. Now, mind you, I had my annotations still on the chart. Price had not hit the consequent encroachment, the mid of the monthly fair value. Okay. Now, 2 questions I asked: are we heading to take the sell side, or are we coming lower for discount prices to continue higher? What do you think? In situations like this, you rather wait to have more details. Okay. You wait to have more details. So what I was asking was, are we heading to clear the sell side, or are we just coming lower for discount prices to buy back up? Okay, this was how we looked on the daily. So we had this already violated, and this was where we at. I said, remember I told you once we have that shift we will deliver lower, and this was the shift I was talking about. And price took this low. This is a daily time frame. So imagine you recognizing price from this point of taking point here that we were already delivering lower, and that's really what happened. We delivered lower. Okay, so you can see, haven't took this low, retraced back, okay, and started selling. So this would have panned out for a buy day, but obviously because you understand the narrative, that's what I call narrative, or your IUF. You understand the narrative that because it took this low, we're going to deliver lower for some days at least. So for a day, 2 days, 3 days, we delivered lower, and that's really what happened. Do you see now? Took this low, but back up 2 days, 3 days, sold. Okay, we had the first SSL to the left taken, then the second one as well taken. Right, I said this gives me an inclination that we're going lower, and this was how price fared. Okay, you can see within that fair value gap on the daily, bought up on 4 hours and started selling. Okay, and this is how we look into this is an example of how to backtest. Basically, if you've not done any backtesting in such detailed manner as this, you have not been journaling rightly. It takes a lot of effort. You can see now, and you can see even in my journaling, I'm just really focusing on the basics. I could draw 100 lines on the chart, but of what use is it? Okay, so within the hourly time frame, a break in price here further confirm price delivering lower. Price is fractal. You can see fair value gap on the hourly, break of structure again, okay, and continue lower. Now if this is selling lower, it means fiber is buying. We're going to see it. Obviously the same thing on the hourly time frame, yeah. And this was where we had the SMT with EU. So you can see created an higher high, okay, of which EU was meant to create a lower low, but EU didn't do that. That's the SMT you're asking for. Alright, but EU didn't do that. So EU was meant to create a lower low, but this was what? SMT. SMT with DXY, SMT with EU. So DXY created a higher high, but EU created a higher low, which signified higher prices. And you just have traded that higher. And we had price bought up. Okay, so all of this was fiber, and all of this was dollars. Can you see now? Okay, and you can see dollar and fiber, 1 hour time frame, beautiful. Fiber, $1. Now look at how I even made my journaling exciting. Look at how I made my journaling lively. Look at how I made my journaling something that when I see it makes my head bubble. You see now, it's me making my journaling exciting, making it something I always want to go back to. Okay, it takes a lot of work, I tell you. Okay, so then I showed you the SMT with EU is sold down, and SMT with fiber as well, bottom. Now we left dollars, we took fiber. What happened on fiber? Okay, fiber has sold so much, and this was where we at. Okay, so it was an issue of are we selling or are we buying? Okay, and so the same things as well on the monthly time frame. There's this fair value gap, okay, and all of that. There was two fair value gap on a weekly, this one and this one. Fiber went for the higher one instead, and on from there we had a consolidation, okay, and slowly we started coming down. So I said this was our new invalidation for us to continue seeing higher prices, okay, because you are not to marry any buyers, you are to feel the thermometer of the market and trade what you see, okay. And on how price moved to the upside. First entry, second entry, nice rally to the upside. Third entry, so imagine you're trying to look for sales within this nice bullish program, this nice buy program, okay. You see internal liquidity came back to, right, we call this what right, this took the low, bought up, so this will be the breaker, sold into it and bought up, yeah. So on and on like that. And this was an SMT with DXY. It means that DSY as well did in II, but EU failed to do a lower low, and that was really what happened, okay. And on like that, rallied. You see now, still the same rally we saw, okay, earlier, that I showed you earlier, and that was exactly what happened to the upside. Great trade. Great trade. Great trade. SMT with dollar right at the very start of the week, and on like that. And you can see how I was very detailed in my examination of price. And this was Thursday, optimal trade entry, a lot of rallying to the upside, and on like that. Thursday's price action, optimal trade entry on Thursday New York session. This was it. Optimal trade entry, did a BMS, okay, took London's high. Optimal trade entry New York, you can see beautifully, and okay, and an expansion to the upside, and all of this. You can see now. So you can see how we carefully looked at how to journal and how to go about price and how it did happen, and on like that, and how dollar printed, okay, how dollar printed and how fiber printed. We kept on buying, okay, came to fill the fair value gap, this fair value gap on a daily time frame, continued higher, okay, and that was how we had price printed. And see, because of this that happened here, all right, you could as well see a shift on your lower time frame where you would have engaged price, and this was it nicely. 1 2 shift or break of market structure, whatever you can call it, and that was it. And then the next one was EURUSD. So you can see that trading is already a bit complicated. To keep it complicated or to make it complicated, yeah, it's a little bit complicated to add to it. There's a lot that happened right here. But just focusing on the essentials, that's what gets the job done. Took sell side, took buy side, retraced back to order block, expanded higher, okay, and crash back. Now the function of this coming to this side rather than taking this BSL will be a function of your high time frame. And so when you check your 12 months, you begin to see how that price just covered the fair value gap and sold back to the high time frame fair value gap. This low and this high, and this low. Okay, so we are then expecting, if price will rally back up to take this high, ultimately this high, or we'll keep selling. But we are not investors, we are traders. Do you see now? So we just work with available, what is price doing exactly currently within the weekly time frame, and we take it from there on a daily time frame, and we analyze price from that angle and make money. Okay, so how you determine your directional bias on fiber? You stay with dollar. This is selling bad. If you trade GU, for instance, I told you GU has a mind of its own. Okay, obviously, of course, you still look at dollar to ultimately determine its directional bias long term, but GU can still manipulate up and down. If you trade GU properly, if you take a trade on fiber and you take the same trade on cable, you can hit a stop loss on cable and then fiber goes your way. Or you can mess with your psychology where your trade on cable is almost eating your stops. Okay, your trade and cable is almost hitting your stops, but trade on and fiber is still intact, and then you're worried what exactly is happening. Am I about to hit stops or not? Do you see now? So that's why I really don't advise newbies to start with trading cable. But if you feel cable is that pair, besides I don't like its price action, even though it's it does deliver good, but I don't like its price action. Now we're within the CB on the monthly. We exactly don't know what is going to happen. So what do? We wait till dollar gives us a next line of direction, and once dollar gives us the next line of direction, you can see how price respected all of this to the upside, created a fair value on the monthly, bought up into this point and dropped down, took this low, now filling this. Now we can easily call this what? A break of structure to the downside. Yeah, took this point, come back down, retrace back, and we should expecting lower prices. Yeah, but what determines that is again my dollar, what dollar is doing. Okay, and so for what dollar is doing, you can easily piece everything together and make trading decisions. So you already have a difficult you already have a market that is difficult in structure to complicate things. Focus on the essentials and how you then place trades. I think I already showed you how this was the top-down analysis, and from that top-down analysis you were able to get your trade from this point. I haven't taken this break of structure because you can say that I struggle with entries, but I'm telling you that this is how you get better. Okay, price did an SMT with fiber, and at the same time it did an SMT with fiber. That would have been your entry. Okay, and this would have been your entry, then your stops, and you take it to the upside, of which eventually we analyzed fiber and we saw how price moved, and this was that trade. Okay, entry, stops, paid trader, another entry. All right, you see now, another entry, expansion, another entry, expansion, but it starts from the high time frame. Oh, does this make sense? Please, I'm tired. Please just message me, send messages in the chat box. I really want to know if this makes sense to all of you. Oof.
Settle the nation, hallelujah. Settle the settle the angry. Settle the tired.
So,
settle the frustrated. You said, come unto me.
You want to keep it very simple. So, the last session, I didn't plan to have this, but I think I will. We'll look at top down on fiber next weekend. I like that you were honest. You said you were journaling, but not in that way. Yeah, exactly. Now you see how best to journal. Okay, and that's it. See how best to journal, right? And that's how you get better. That's how you reinforce the same things. So we're going to take this piece of data and look at how price moved. The last session, which will be next weekend, right? We'll take this piece of data and how price moved from this region, bought up, took the sell side, went to take the buy side, retraced back, used this point as a reference point, bought up. and how that you shouldn't be sold on the pipe dream that we will just keep going up or going down in the marketplace. Because if you didn't zoom higher to a 3 month time frame, you would fail to see that, well, these points were just, a retracement to continue lower, to take this what, low liquidity run. Okay, right, you can see now. So it just retraced, but I had to zoom to that, to an higher time frame, okay, to see that this was just a retracement to continue lower. But if we're just on a monthly time frame, you would really think that everything happening here was a good price action and we are buying to the moon. But did we eventually buy to the moon? No, we crashed down to somewhere different. So for those who took notes, you can send it in. You can also post it on Twitter. I will tag, if you tag me, if I see that it looks good, I will treat whatever you shared. You see now. So I'm really tired right now. I intended 2 hours for this class, but I just had to, say quite a lot of things. Should you go with fiber or cable? How about my entries? I already showed you examples. If you were in the first session, you saw how I took my entry and JPY. The truth is, nothing is point blank in the marketplace. Nothing. Even if I show you 1,000 entry, you will still need to engage yourself. You will still need to trust yourself. And that's the truth. You will still need to trust yourself. This is where backtesting, journaling, and experience comes in. And it takes time sometimes to even, you see people are very good at taking demo trades and they go into a live account and they're fidgeting because they have not built conviction over the years. Okay, I showed an example of an entry yesterday. I showed series of entries on Crude oil when I was going through the journaling and on fiber. So what entries are you asking for? Should you go with fiber or cable? I advise you stay with fiber. Fiber is very good in price action and all that. Cable can be distorted with dollar because you're looking at your dollar to read what fiber will do, and dollar and fiber are almost opposite. They move oppositely each other. The best twin pair you could have. Yes, please. Yeah, please remove the flouts, the cotton. Yeah, you don't need all of that, honestly, because what those things do to you is that it makes you, Razvan said he was going to remove the flout, the cotton theory, and some other shit. The thing is that it makes you streamline to looking for particular things at particular time, and it makes you lose sight of what is happening, the overall narrative, what is happening, okay, and how to go about price. And then you just get your chart clumsy, and then you're already painting. You're not a painter. You turn to Picasso overnight. That's what eventually. So stay with fiber, Ali. Stay with fiber, okay. Simplicity. The videos we've made available. I'm really tasking my video editing team, so they should get it ready today into tomorrow, and I should at least post the live session one tomorrow. Yeah. Okay, so if you have notes and you wrote quite a number of things, you can share it here, and also if you would love to post it on Twitter, tag me. I'll repost it if I see that it looks very well. Alright, so with many of us, our minds are so much focused on lower time frame. Why the keys are on the high time frame? Exactly. Psychology is a big part. Yeah, because one of the things I'll talk about as well is psychology. Okay, at the last session, teachers how to get your entries in lower time frame. I already showed you. I'm surprised. I'm tired. Oh boy. Okay. Okay, so Miles, if you remember this price action we went through, okay, and how beautiful this happened. So this was beginning part of November 1. So let's just go to daily time frame to see it. You don't know what fair value gap means? Let me take it. Signals, chef, not entries. No, I don't believe in entries. Fair value gap is just when you have a big moving price. Okay, let me just check GU for what you're saying. Okay, now look at this. This is GU. This is Monday. All right, this is a fair value gap. All right, this is a fair value gap. This is Tuesday, then Wednesday. This is what? Another fair value gap. Bodmas, I've taken time to answer most of the questions today. Doesn't make sense. So this is really fair value gap where you have a huge run in price and the sales don't come back to recover that, and then the next candle again is continuing that trend and it leaves a gap. That's really what, right? Exactly. So let me go back to my entries for the person that's asking for entries. So November 1 we had November 1. Yep. Yeah, this was November 1. So we had this huge sell the previous day. This huge sell the previous day, and this. Alright, so on seeing this, I anticipated price to sell, at least to take this low. I didn't expect that we're going to then run off and continue higher. All this we're having now, right? So I anticipated price to at least take this low. All right, and let's go forward time frame. Okay. That's an upgrade announcement for you folks. It's going to be a cup trading challenge. Talk about that at the end. So yeah, this was it. Okay, so this was even another entry right here that sold to take this low. I'm staying with this November 11. So immediately after this point, then I actually showed my folks, right? And this was the huge displacement, and dollar was given that we're going to sell. The first entry was around there, which I took, and of which dollar already took in the opposing side. Okay, let me just show you. You would appreciate a lot of things that Michael did for the free videos he posted on YouTube without charging, because he started teaching people, how stressful it can be. And Michael did a lot of 2 hours long video. Well, a lot of people are lazy. Now you can see dollar already took this high. Okay, so it already gave me that inclination that even when fiber had not taken this low, we're going to sell, because dollar already gave that shift. No. Yeah, dollar already gave that shift. Okay, and this was a very good entry. Well, let me just stay with fiber. So So I got in very good entries around here, but that's the way I want to focus on. So just focus on this point. You can see what happened. The next day panned out. Asian session into London. London one took this high, sold back down. Can you see your entry right in front of you? Retraced back, first entry, sold back, second entry, sold again, third entry, till taking that draw on liquidity, which is this point here. All right, and that was it. Now let me go 5 minutes so you see it clearly. All right, so this was it. London gave that fake out, sold back down, still within London. A first entry, sold down, second entry, sold down, created a fair value gap, third entry, then into New York, just a slight retracement to fill this fair value gap well enough and sold back down. All right, now if you didn't pay yourself before this TP, most likely you'll have taken a loss, because it retraced so much back up, and if you're shifted your stops, or you'll have even been scared to hold onto price, and it tanked back down before the huge rallying back up. How you get your entries is first determine your high time frame point, and then getting in on the trade. I remember this trade, we looked at it together. Let me check the Discord and see it together. November 1. Yes, okay. All right, November 1. Okay. Yeah. Okay, this was the one I was just explaining, and how dollar printed very nicely. 1 2 1 2 15-minute time frame entry, another entry. It kept expanding like that. Price traded above the opening price, having taken this low, okay, and bought up, came back down. Okay, so keep things simple, and that was exactly the same thing Fiber did. Your easy bread and butter setup, and offered nicely 3-1. Pay yourself, because there's sometimes you take good trades and the market moves against you. Okay, so all right, this was okay, when I said the much needed shift that was needed, the much needed shift that was necessary, and we went to attack this buy side 106.894, which did happen. Yeah, so yeah, that was it. If you've not subscribed to my YouTube, subscribe to my YouTube. I've organized learning there as well. If you are new to this community, join my free Telegram channel. The link, I think a lot of you came in from the free Telegram channel from Twitter, then from the free Telegram channel. If you're not on the free Telegram channel, you can ask anyone here to give you. If I post this on YouTube, I will post the descriptions on YouTube. Now there's going to be a cup trading challenge next year. It's going to start February 1, so January can do all of its nonsense. Winners are going to earn up to 10,000 USD. Now, depending on the people that we have to take that challenge, you're going to earn up to 10,000 US dollars. Now, you're literally going to trade your money, a minimum of 500 US dollars, okay, and you come demonstrate your trading scale, okay, and we're meant to start earlier, and I think around November, but for some reasons, okay, and a lot of people complain that it was a late notice and all that. So it's something you can plan ahead. I will send the link to join. It's a private channel, so don't bother joining if it's something that you don't want to be a part of. Okay, it's not it's not compulsory, but obviously if it's something you know you can make money from, why not? All right. Next year, February, so there's a lot of time to plan ahead of that. All you need to do is to register an account with CWGs. There's a partnership with myself and CWG. Now, someone asked if it's funding account. I don't trade prop, I trade private equity. Okay, so I trade my personal funds and private equity. Do you see now? Okay, and obviously looking to start an hedge fund in Dubai sometime soon. We're already putting preparations for that, and that is in the books. Okay, so so I'm going to send the link out. It's a private Telegram channel for those who want to be a part of the live cup trading challenge that's going to come up in February 1. So before then, you'll have been required to create an account, register, verify your account, and fund your account with a minimum of 500 USD. You can even start with as much as $1,000. CWG is going to double your equity size by 100%. So if you fund $1,000, you'll be getting 2,000 US dollars. If you fund $500, you'll be getting $1,000 to trade. You can withdraw what you'll be getting, but it gives you a leverage to trade as though you're trading with 8,000 US dollars, and you can come and showcase your skill, okay, and make money for yourself. All right, the first place is going to be given up to $10,000, the second place up to 5,000, the third place up to 3,000. All right, so yes, it's not bluff, it's real money. You're not trading, it's not prop simulated funds, it's real money. Okay, and also I said we're going to have a final session after now. That's next week Saturday. So just to say again that we CWG is the platform I partnered with. They're not really known, because they used to be an institutional brokerage firm. Okay, they offer services majorly for folks with big accounts, but they are widely known in Europe. Okay, and they offer great services. Previously, okay, I used to trade with another broker, and so I'm moving my new clients to CWG. All right, I'm going to send the link. Okay, if you something you want to trade with them, because there are partnerships and bonuses I'm going to give out. One of them is a free annual mentorship to those who actually qualify. There's some things, just some basic things you need to do, okay, to qualify. Okay, it's for my annual subscription, and my annual subscription is 500 USD. Now, someone said, well, at the end of the day, you still get to charge. Okay, and I think you get to a stage where you really realize that there's nothing free in Freetown, right? But without the annual subscription, if you stay within my Twitter page or stay within my Telegram channel, you can be fine. So it's just added benefits you get subscribing. You don't tell such to someone who selflessly gives himself. It's just the same way people would discredit Michael for charging, and Michael has given so much to the community than anyone has, any trading guru has. Okay, so that's just a side. I can't wait to buy his book when his book comes out. Now, I wouldn't say that I know everything. I'm going to buy his book. And he's going to really sell. So, and he's going to make money from that. Now, what is your business if he makes money from that? What should be your goal? Learning, understanding. People are just unnecessarily interesting. That's the way life is. So he gives himself, and he's putting some monetary value on his intellectual property, and you say he shouldn't charge, you should give it for you free. Interesting thing about this is that the same people will grab at the chance of charging as if it opens to them. You see now. So So there's going to be 5 free annual mentorship open. All right, I'm going to pick from the first 50 people that register with CWG. I'm going to put that out later in the week. Okay. Okay, so people that register, minimum deposit is $100 to register and start trading. Okay. All right. And yeah, so that's another side. So the cup trading challenge is what we are prepping up for next year. If it's something that excites you, I'll send the link. Just don't join if you don't want to be a part. It's a private channel, so it's not a public channel. So I'll just send the link out for the cup trading challenge. Information already on the group, and it's going to be for next year. Then yeah, something interesting is also coming up next year as well. So I condensed my mentorship. Initially we always do a quarterly mentorship, but now we want to make it easily accessible. Okay, easily accessible. All right, easily accessible to people. So it's just $50 per month. Okay, where you have access to my live trading chat room. So twice or thrice in a week we'll have live trading sessions. Now the live trading sessions is not to come spoon feed you with signals. I wouldn't do that. So if that's what you're looking for, don't even bother coming. But you're going to see how I see things and how I think, and from there you can be able to become better. Now it's my joy if you're making money, and at the end of when you're making money, you $50 is just something, it's peanut. Okay, it's just what you do for any subscription anywhere, and it's $50 per month. So make it easily accessible to as many people as possible. You said so. We're doing a structure like that and creating stuff, so you have access to the you say you're expecting a Christmas gift from me. This is a Christmas gift. I'm spending 2-3 hours of my time, okay, freely. Okay, now 3 hours yesterday, 3 hours today. Okay, and we're still going to do a last session which wasn't bargained for. All right, so so I'm already creating a structure for that, where you have access to the whole Discord, yeah, all the flashcards, all the videos, over 250 plus now. You have access to me to ask me questions. Okay, you have access to all the members. You will see. Let me just show you, if you're still on my live, show you how detailed the Discord is, so you can see all these are price actions of just these pairs, where you can easily just click on any channel and stay there. Now there's the member chat where you can as well, okay, learn. There's a way you learn in an organized manner. Okay, now there's a study part. Threads are things that helps you, things that words of wisdom that helps how to be a niche player, understanding market order flow. This is a notebook from, I think, Mohammed, now I can't remember. Just different things that really help you. The same things that reinforces things. Trading is not daily. All right, library, the videos, the live trades. I think currently we have 246 videos. You can see everything on here. So the mind space, the resources, a whole lot. So there's a whole lot. This is a resource center. Okay, yeah yeah, it's good to hear from you too. So this is a resource center. All right, it's a resource center. All right, so this is all you get for $50 per month. Okay, so that's for next year. So take your time, watch the live session trading 1, live session 2, then we'll have a final live session next week Saturday. Okay, so if anyone asks, just tell them next week Saturday is when we have the final live session. All right, so just let me just give 1 or 2 people final chance to ask me a question, and I can cut this off and prepare for my day. It's about 9 a.m. now. Okay. Quick. Yes, I do actually. I use bond, but you don't need it here. So why I didn't dwell on that. Now, when I see people on Twitter say so many things, It's not because maybe I don't know those things as much as I just focus on what you need to focus on. That's why I've been reinforcing the same things, the basics. Yes, I do, but just staying with the basics. Seasonal tendency, once in a while you just check it to see what price is likely to do. Seasonal tendency is not something that you have to keep looking at, okay, to determine your bias. You would lose money, right? So stay with the basics, your IOF, basics, being patient, knowing when to trade, when not to trade, knowing the right environment, knowing when the environment isn't right, and all of that. Okay, it does help. Okay, so I think I answered your question. Any other question? Okay, before I put it off. JPYX when trading cat JPY. Yes, I do actually. I think I have it here. So yes, I do JPYX. I use it. This is it. I do JPYX. Yeah, JPY index. Yes, I do. I do. Yeah. Yeah. So we will have a final session next week Saturday. Next week Saturday. Give me a shout out on Twitter. Okay. Tell me what you learned. If you wrote notes, you can share it on Twitter and tag me. You can also share with your fellow students so they'll also learn from it. So I want to see the summary of everything I said for the past 3 hours. Yeah, 3 hours. It's been a long time talking. If your daily bias is bullish, do you always wait for a lower time frame sell side liquidity to get taken? No, I don't always, though that is high probability. When you see the sell side taking on a lower time frame, then it breaks structure. So let's assume your higher time frame is bullish and higher time frame is bullish and you get something like this. You get something like this. 1, 2, 1, 2. Okay. All right. So this gives me that high probability that I'm looking for. Took the liquidity, and then this will be my breaker entry. Then boom. Alright, so yeah, pretty. You can also post this on Twitter and tag me. Okay, the live streams will be posted on YouTube and on Telegram. Yeah, so Duke of Crypto, do you understand that? I don't always look for sell side to be taken, but once your bias is bullish, your lower time frame will give you a narrative to trade off on. And that's where you allow your Monday to trade. And once your Monday trades, it gives you what to work on. So what to work on. I'll show you an example if I can. See an example. Okay. An example of such. An example of such. Okay. See this now. Not a perfect example, but at least it sells the story. See this. Monday started, sold. Look at the volume imbalance. Monday bought, Tuesday bought, did the high of the week and ended a sell day. Look at Wednesday, sold, Thursday sold, Friday sold. Beautiful. So in wanting to engage price, On this, I would look for price sticking to stays low. All right, so when price sticks to stays low, and then that's when I will look to engage price for any retracement to continue lower. So my invalidation then will be when stays high and lower Thursday, lower Friday. Does that make sense? Look at this one too. All right, you can see price took this lower, took this punch, and was buying up. So ended the week Friday this way. So you can see Monday, Tuesday, Wednesday, Thursday, Friday created its fair value. Now the next week, Monday started buying. All right, because objective met already. Monday started buying. Monday didn't go lower. Monday started buying. Then Tuesday I should look for higher prices. Wednesday higher prices. Thursday higher prices. Now within that framework, you're going to lower time frame. You watch how price prints for you and engage in a lower time frame. Okay. Obviously, I can't see everything on a single stretch, even if we spend so much time together. But at least these 3 hours, I don't know why I keep saying 2 hours, because my mind was to use 2 hours. So these 2 hours we've really spent time of learning together. Okay, and when it is posted, watch it again. And next week Saturday we'll have a final session. Okay, and we'll make sense of it. All right, so I want to bid buy now. Keep it simple. Keep it simple. That's how you make money. Discipline, journaling, backtesting, diligence. You can outsmart these things. You can't outsmart these things. You can outsmart these things. All right, you can outsmart these things. This is how you make money. This is how it gets better. You can outsmart these things. So yeah, so I'll post a link for the Cup Trading Challenge. It's happening February next year. You can earn as much as $10,000. Then I'll also post, the link to the CWG market, where you register, verify your account, and fund and trade. Okay, there are packs that will send out, okay, to people that do that, and you could be lucky to be a part of those who will be a member of my annual membership. Just five people annual membership, which costs 500 USD next year. So from January to December, freely you'll be in the community. Okay, you don't know how much that is going to boost your trading game. It's crazily. Okay, and yeah, so that's pretty much it. If I'm missing anything, that'll be till we talk again. All right, so bye for now, friends. Yeah, don't forget, give me a shout on YouTube, on Twitter. Don't forget, give me a shout. Okay, and post your notes too. Okay, take care of yourself, friends.